Well, in a new note, JPMorgan is crediting ChatGPT for the recent stock market rally. In a new note, the bank cites interest in artificial intelligence for more than half of the gains in the S&P 500 this year. But the bank does not view this as a positive thing. The strategists there say that the AI gains plus a rotation into safety has resulted in the narrowest stock leadership in an up market since the 1990s. Really interesting note from Dubravko Lakos-Buhas and the team over there at JPMorgan. And in particular, they're zeroing in on some specific stocks that they think have really benefited from this phenomenon, right? That it's been the likes of a Microsoft, for example, of a Google, Amazon, Meta, NVIDIA, CRM too, Salesforce too. So we've had other analysts sort of and strategists talk about this a little bit this year. This is a little bit of a different angle on that, focusing on AI. Yeah,
the numbers that they were putting on that, 53% of S&P 500 performance they're attributing to the language learning model innovation companies, and the performance for the NASDAQ, 54% of the growth there. So all of that considered, you think about what we're set to hear over the course of this earnings season and how many of them largely going to be expected at least to lean into that narrative even further and perhaps even show how they've already seen some of their monetization efforts come to fruition and what that run rate looks like more long term. That's, I think, what investors want to hear more about.
Well, and to me, this is the crux of this JPMorgan note. The current degree of crowding implies the risk of recession is far from priced in, right? There's such a dispersion of opinions right now on this front, though, in the markets, which is really interesting. You have, as we were just talking about with our the guests that were just on, is the Fed going to cut rates by the end of the year? That implies one market reaction. That would also imply that there is going to be a recession if the Fed is going to have to cut rates. Right. What does that mean for stocks? So it's just, there's definitely not a clear trajectory right now.
No, that's what we've heard time and time again from our guests who have said, well, look, if the Fed does cut rates, then that means they see something far worse about the economy that is actually prompting them to do so.